Hi guys, welcome to yet another analysis. So, if you guys have seen the previous video, we were analyzing volatility 51s, which is what we are always will be analyzing, especially now. Right? I don't know what the future holds, but for now, that's what we will be sticking with. So, if you would remember on our previous, okay, let me not gravitate on what we said would happen and focus on what we see or what we think will happen next. Right. So, as you guys know, first of all, we draw our psychological levels, right? And if you want to understand how we draw these psychological levels, I'd advise for you to go watch my previous video on how I got these psychological levels. But yeah, I feel like they are more like they're evident. Um, you can see why um, specific psychological level was respected and all that. And yeah, this was a beautiful sale, honestly. And I'm disappointed that I was not able to catch this, but it's okay. We move. Um, yeah, so we see that we are currently within the 260 and 220 playground. So this is our playground. So these are the only psychological levels that I'm gonna keep for now until we break out of them, right? And we can see yesterday what happened was we were somewhere around 240 and yeah, personally, I mean 260. And we can see that we did say the market could either go up or come to the 240, which is something that it did recently. And we can now move on to, and also we can see that it broke our psychological level of 240. So the trend is now a downtrend, meaning that if I am planning on taking a trade, I'm not going to be looking for buy trades, no matter how there's confirmation for me, because that would mean that I am trading against the trend, right? So this is very important. Once you identify your trend, stick to it. Don't trade against it, no matter how this good setup looks, right? Perfect. So I'm gonna switch to my 4 hour time frame because now we have identified our psychological levels, right? We can see the market is melting. The market is melting. There is nothing for us to see. Like no one could literally tell what's gonna happen here by just looking at what's happening with the 4 hour time frame. And what I did early this day today was that I was like, okay, so what if I pull my Fibonacci from the lowest low? Because if I were to like move or yeah to like convert this to a weekly time frame of which the website version of it doesn't have weekly. But then if you are interested on seeing like the weekly and the monthly, then you have to go straight to TradingView, right? And then obviously on TradingView, this is the lowest low and that's my highest. So I might be expecting to see a form of rejection somewhere around here. But then remember, we are currently in a downtrend. So whatever happens here, be cautious. Be cautious, honestly. Personally, I wouldn't advise for one to take the buy, right? Because I also wouldn't take the buy. But if you have like a big account, like I said, I only trade $10 account. Literally, you will never see me unless if I'm trying to like grow my account, of which I could like maybe say I have a $10 account and then I grow it to like $50, right? And maybe like I close, I'm not gonna withdraw like the $40 and leave. No, I'm just gonna continue building on that. Basically, what I mean is that I always start with $10. I will never like um what's the word, invest or deposit more than $10. I'd rather deposit $10 instead of depositing $100 because there's just something about my psychology when I have a huge sum in my account where I feel like I can take risk. So when you have a small account, so it's a thing of you know that you don't have that much you have to be cautious about how much you spend and also the risk, right? Perfect. So um now that we see that, okay, yeah, we are in a downtrend, and this is our previous lower low and then our higher high. I don't know what this is, but this is literally giving um order block, right? If we were to continue with our downtrend, I'd honestly would see the market coming back here for to test out this order block and then continue to the downside, but we are not there. So let's go to 1 hour time frame, because on the 4 hour time frame there wasn't much for me to see, right? Yeah, it was melting. Also, yes, so I wanted to also mention something. Yesterday I did mention that we might be looking for buys somewhere around here. Yeah, somewhere here. I did say we are gonna look for buys, and unfortunately, yes, I did not blow my account, but I did lose a few dollars, but my account is still in a good condition for me to like continue trading. So remember, I did mention that the moment the market gets or the price gets into your fair value gap or your order block, don't automatically take a buy. Don't chase for sniper entry, because imagine for someone who has a $10 account like myself, this is very huge. My account would have blown if I actually took the entry exactly when the market hit my cycle, my order block, right? So like I said, always wait for this pattern. Always wait. It's like a head and shoulder of some sort. And yes, I did get that, and on the 5 minutes time frame, so my trade was valid, right? My trade was valid, and unfortunately it did not go as I would have loved, because we had a low here, and so basically this point here is that, and then the market went up, it went down, and then it broke the previous low. So this is our next new low, and then the market broke the previous here, the previous lower high, right? And then I drew out my order block. So my entry was somewhere here. So the market seemed as if it was gonna respect. As you can see, you have these small candlesticks here, right? So the market got into my order block, and then yeah, it's not that this entry edge doesn't work. It's just that the market, and I was also trading against the trend. So the sellers were going in very strong, right? So that's the reason why it did not respect. But that's okay. At least you can see the difference, right? You can see the difference of someone who enters immediately here, and you see this is where they would have stopped. You can see the difference in the size of the box. So this is more smaller. So if I entered here, my stop loss was somewhere here, compared to someone who entered here and their stop loss was there. So eventually they were also gonna be taken out and potentially blow their account. So now that we see um that it did not respect, I also see a very beautiful um I see a beautiful here order block. It's a very beautiful order block, and it's next to my psychological level. So this is also something that I should keep track of going forward. um let's see. Now let's see what's happening. So since we broke the 240, we retested it, and then we are going down. So I think it would be fair for us to assume that the market is headed towards the 240. But the thing with the market, how the market moves, is that it takes breaks, right? It always, like, you can always jump in the market. There's always an opportunity. Sometimes, yes, you might not see it on the 5 minutes time frame, but then there is always an opportunity for you to jump into the market, right? And that's literally what we are currently looking for. We are looking for a point in time where the market is like taking a deep breath. It has been melting, so it's gonna take a deep breath and then continue melting. So we want to leverage that reversal. That's more reversal, right? So as you guys can see, I'm on a 5 minutes time frame, and still there isn't much for me to see, right? So that's what makes these difficult. And we can also see we have other blocks. We have two other blocks, right? We have two other blocks. But how I trade these kind of order blocks, it has rules. Order blocks also has rules, right? And then my rules are: number one, if there is no break of structure, that order block is not strong. What I mean by that is that this order block is less strong compared to that one. The reason why this one is stronger than this one is because this one has a break of structure. Remember, what is a break of structure? Break of structure is when the market is, for instance, trending like this, and then it breaks structure. It breaks the previous higher high if it's in an uptrend, or it breaks the previous lower low. So BOS, break of structure right there. And we can see here it has a break of structure, right? And the second condition for my order block to be strong is that that order block has to take out liquidity, right? Remember, what is liquidity? Liquidity is when there is a lot of, like, something like this. Like, maybe other people call it support and resistance. Basically, where the market is very, how do I say it, is very sensitive towards that area. Like the market is constantly rejecting around that area here. It might mean, the reason why I am saying this is my liquidity level or area is because people might have taken buys here and then put stop losses here. The market gave these people a lot of chances. First here, second, and the third time. So maybe someone on the third time they took a buy thinking this is their support. They put their stop loss there. So this is liquidity. It means there's a lot of money below or down below this area right here. So that's my second condition. And my third condition is that there has to be a fair value gap. And an order block that has a fair value gap is more stronger than the order block that doesn't, right? So as you can see, both of them do have fair value gaps. But the reason why I am more interested in this order block as compared to this one is because this one has all of the three conditions that I've mentioned. First, it breaks liquidity. Second, it takes out it does a break of structure. And third, there is fair value gap. So I would not advise, let me just remove it so that, yeah, if it does respect, that's okay. But remember, we would rather take an entry that has more probability of winning than the one that we are just, wishing on a star that it will actually respect. So I'm gonna go to my 5 hour time frame. Like, okay, so now we know that, okay, we are more interested in the market going to that area right there. And honestly, if I'm gonna be honest with you, like, I'm a person who always, like, I question a lot of things. I question, why did the market turn? Why did the market turn here? And it's gonna help you a lot, because sometimes there's a lot of things that we miss when we are trading, right? So it might have been that we might have missed something, right? So always question those things. Why did the market turn here? Why is the market reversing where it did now, right? So I'm gonna go to a 3 minutes time frame. I don't like going to these like small time frames, especially when I'm looking for an entry, right? and then let's go to 1 minute time frame. I don't even take entries on a 1 minute time frame because it's very noisy. But then looking at the condition of what we are seeing on the charts, we are not left with any choice, right? So now we see that the market is turning. Remember, it's buying, right? And remember, we don't want to trade against the trend. So obviously someone might be like, why don't we take a buy here? Blah blah blah. That means we are trading against the trend, right? So I'd honestly rather not do that. Just wait it up, see how it performs, and then look for selling opportunities. So unfortunately, since we did not see or find anything yet, my suggestion would be wait for the market to get here, or wait until you get a more clearer setup, especially on a higher time frame like 5 minutes or 30 minutes or 1 hour, 15 minutes, right? But at the way the market is currently looking like, I don't think I will be trading. Yes, it's tempting because it's melting, but I wouldn't advise for one to jump on a moving train. Rather wait for the market to get at a specific training stop, and then you can jump in. You can literally jump in. So yes, you are more than welcome to like go to smaller time, I mean like 4 hour time frame, just to see what's happening. Why is the market doing what it's doing? Right. This was also a beautiful move. Also a beautiful move. Yes. But then yeah, this is the past, so there's nothing much, like we can't dwell on the past. So yeah, that's all from me today. I didn't want the video to be long because I'm not analyzing in a way that I'm gonna give a potential um setup that is like gonna play out either today or tomorrow, but we wait. We wait. Patience is a virtue, guys. A lot of people lose money because they're impatient. I'm also like that. So what I do is I also have a demo account. So whenever I feel impatient to wait for a setup to hold, I take the trade on a demo account. Because sometimes it's a thing of ego, right? So you want to prove yourself that I actually did see that setup. So instead of proving yourself on real money, rather prove yourself on a demo account, especially when you are not confident about the setup or the trade that you are about to take. I mean, let's see. Like, I don't want to make up scenarios because, guys, one thing about trading, do not make up scenarios because you want the market to go your direction. You don't trade what you see, you trade what the market gives you. You trade with the market, right? You move with the market. You do what it does. You take what it gives you and use that. Don't start seeing things that are not there because you want to trade. It's okay, because I feel like the issue again is the idea of consistency. Guys, consistency is not trading every day. If someone tells you that they're not consistent because they don't trade every day, that's wrong. I feel like personally for me, I've grown to understand that consistency is not trading every day. Consistency is more in line with how often are you learning the market, right? So I feel like with me also here today now, um recording videos of me, that's me being consistent because I'm consistently learning what the market is doing, and I'm also like journaling that because it's easy for me to forget. I have a lot of books with a lot of charts and all that, but the market is always evolving, the market is always changing. I could have one setup today and I backtest it and it works, and then the next month it no longer works. So you're consistently learning new things that are happening in the market. If someone tells you you're not consistent because you're not trading every day, they are lying to you. Rather focus on learning. Like trading should be more on learning rather than, that's why I don't like sharing how much I made uh, and all that, because I don't want you to focus more on, oh yeah, the strategy actually does work because she made money out of it. No, I want you to focus more on learning and be comfortable around the market, because it will become second nature to you, in a sense that you now see when to trade and when not to trade. And it's okay, it can be like an entire week without trading. That's fine. But what matters is that, do you have a reason why you did not trade that week? And obviously, it goes back to you going into the market and actually looking through it and seeing that, hey, these conditions are not good. It's like surfing. I know I'm not into surfing, but then obviously you wouldn't want to surf when there is a storm, right? So it's basically the same thing. You prepare yourself to be in conditions where it would be ideal for you to actually trade. And now that we are seeing that the trend is a sell, you are gonna get a setup that looks like a perfect buy. Trust me. If you want to take that trade, rather take it on a demo account and make yourself feel good about having a vision of like seeing, being able to predict where the market price is gonna go to, right? Yeah, I hope that makes sense, guys. I've been in this journey for a very long time, so please, I hope you guys are taking my advices, because I've done them before, so I wouldn't want you guys to make the same mistakes that I have made. So yeah, ciao.